This chart maps the epic upward run in spot gold prices over the last 18 months, peaking right here in 2026. We live in an era of universal economic growth, endless technological innovations, and a nearly infinite list of digital and physical consumer goods. It is a reality completely alien to a merchant living in 3000 BCE. Yet, despite millennia of distance, both a modern trader and an ancient merchant share the exact same intrigue for a particular heavy, shiny rock. As a society, we still actively attribute value to holding gold. In a deeply complex, hyper-connected world, human beings seem to crave an unchanging baseline. One of the first rules you learn on a trading floor is that nothing is valued in absolute terms. Everything is valued relative to something else. Think of a crisp new $100 bill. What is it actually worth? How do you accurately measure its value? You might try quoting the euro to dollar exchange rate. But then you have to ask what a euro is worth, quickly trapping yourself in an endless loop of comparing one floating concept to another. Then there is the issue of fiat currency. Because central banks run the printing presses, the supply constantly increases, steadily eroding its purchasing power over time. If we look at the physical paper itself, it's just manufactured tree pulp. A blank rectangular sheet technically has more utility before it gets stained with green ink, yet we all agree to prefer the printed version. Every single transaction we make is balanced on this shifting, subjective scale. We are operating a global economy without a fixed, objective measuring stick. Gold was selected early in the ancient world to fill this economic vacuum. It offers a permanent standard because it possesses an unyielding physical nature. It perfectly balances unique chemical properties. It doesn't rot, you can't eat it, it won't burn for warmth, and crucially, it cannot be artificially printed or destroyed. This diagram illustrates the speed of light, c. In physics, it's the universe's absolute speed limit, giving astronomers a fixed unit of measurement. Gold performs the same function for economics. It provides a fixed mathematical baseline against which all other things are compared. Adopting an element that cannot be willed into existence, early societies created a closed economic system. Value was determined by a fixed supply, removing the threat of arbitrary inflation. Because gold is chemically indestructible and impossible to manufacture, the global supply is essentially fixed. Since you couldn't simply print more, the only way for one group to increase its share was to take it from someone else, turning 5,000 years of history into a violent game of capture the flag. Possessing the majority of the world's gold served as the ultimate proof of a civilization's strength. If a group held the gold, it meant they had successfully developed the technology, the manpower, and the strategic intelligence required to prevent anyone else from taking it away. For millennia, this metal acted as the definitive scoreboard for human survival and global dominance. The era of literal city sacking and the physical looting of a conquered nation's wealth ended following the surrender of Germany in World War II. The formal surrender of Japan shortly after finalized a global shift toward the complex economic structures and international agreements that define modern trade. Today, the statistical odds of a sovereign reserve, like the Fort Knox Depository, facing a physical raid are virtually zero. Because the threat of physical capture has disappeared, gold's primary utility has evolved from a spoil of war into an abstracted financial instrument. The market for that instrument is now massive. In 2026, you can trade futures contracts, invest in mining stocks, buy gold ETFs, or order commemorative coins stamped with national insignia. Which brings us to a final, crucial question. When a modern trader buys gold to find safety, what exactly are they acquiring? These buyers are acquiring pure certainty against the manipulation of fiat currencies. In a complex digital universe built on subjective paper, we continue to hoard this indestructible rock. It remains the only objective truth about what our money is actually worth.